In this episode, I'm joined by special guest Chris Bjorling, who is a longtime client of mine and also a serial entrepreneur, has run many businesses. We discuss how he got involved in infinite banking, what he's accomplished with his policy since he started about 7 years ago. And we also discuss how he started his own lending company. And in fact, our audience has the ability to invest in that as well. So you'll want to tune in for that. This is Dollars and Nonsense. If you follow the herd, you will be slaughtered. Welcome to the show, Chris. How you been?
Thanks for having me, Nate. Been great. Excited to chat with you today.
Yeah, absolutely. It's been a long time coming. So, Chris, you've been practicing IBC with me since 2016, I believe. And that was, it seems like forever ago. And there's been so much that has occurred in your life, personally, professionally, with infinite banking. And I just thought you just having someone who's been doing it for a long time and had so much change, I think it would be a real blessing to our audience just to kind of hear how you've navigated life doing IBC, maybe some roadblocks, maybe some new things you've learned recently, and all sorts of things that have kind of helped you manage it. But I think it might do best if we just give you the floor for a moment. Tell us a little bit about where you've come from completely, just in business and in life.
Yeah, thanks. Appreciate it. Yeah, so I started my career as a CPA, graduated in accounting, just worked in kind of consulting for a little bit. Graduated in 2010, and so I started IBC in 2016. So I was about 6 years into my business career, I guess, when we first met. And I started out just, in consulting, and then my wife is a phenomenal pastry chef, and we didn't want to hide that talent from the world anymore. So we opened our first restaurant in 2014. And what allowed us to do that is we'd actually invested in some real estate in 2011, 2012, kind of in the aftermath of 2008. There was still kind of
a lot of deals available.
Short sales. Deals were still available, although we had hardly any money. I remember in 2011, I got a $5,000 bonus for passing my CPA exam. And I basically took that money and bought a foreclosure. It was a condo that had sold in 2005 for $155,000. And I had picked it up for $52,000.
There you go.
In 2011. So anyway, so I did that a couple of times. So we had a small portfolio of real estate and, went to the bank in 2013 and was like, please borrow us money. So we
lend us some money.
Lend us some money so we can open up this restaurant and bakery so I can showcase my beautiful wife's talents. And that was our first kind of foray into entrepreneur world. And thankfully that was a success. And so we kind of were doing both real estate investing and this restaurant tour thing. And it ended up that we ended up opening 2 more restaurants. We have a line of coffee shops. But when you and I connected in 2016, I was kind of just entering that entrepreneurial world. I just quit my job. We started this restaurant, had some real estate, but I held on to my job just for the stability. And I quit my job in May of 2015. So that gives you a sense. I'd just been a brand new entrepreneur kind of. When
I didn't even fully know that. Like I hadn't even realized that you were practicing as an accountant in the consulting world for a period of time. When I showed up, I just knew Chris. He had a real estate portfolio. He owned a restaurant. What was amazing, and I'm going to ask you this too, about how you, I think the story that how you found out about us was pretty unique anyway. It's kind of interesting. But in that, I'll just give a little piece. It's like, man, the more you say about your prior world, you definitely can tell that Chris is not opposed to taking some risks. Because whenever you launched IBC, there wasn't like you were holding a lot back. I remember that too. It's just like, you're like, this is great. And then you went in and just, the policy that you opened, at least at the size at the time, it was like, Chris is like all in based on where he was at. And to top it all off, you had just kind of started that. So here we met in 2016, but how did that even come about?
Yes, yeah. So literally my wife's uncle is a pastor at a church, and he calls me up and he's like, hey, you should join me at this financial meeting. And you hear things like this and you're like
network
is it shaped
style.
like a pyramid? So anyways, I love my uncle, her uncle, he's a phenomenal, godly man. And so I was like, you know what, even if it's just to hang out with you, I will go to this meeting. And you were there, Ray was there, some of the other Living Wealth people. And kind of what was presented, just kind of the quick intro, is like, I think what I had experienced in buying foreclosures, short sale homes, I didn't have any money back then when I was doing that. And I just saw an opportunity and I thought, I'm doing it. I'm going to try it. If it blows up, it blows up, but we're just going to try it.
Right.
And honestly, like when I came to the first IBC meeting, it was kind of similar to that. You know, you kind of see a lot of the benefits, and there's so much intricacy within the program, that, as you know, and how it can all be used. And I didn't really have all of the pieces put together. I mean, you guys do a great job explaining kind of the intro and, you know, strategies. But I kind of saw the opportunity through it all, and that's where I thought, you know what? I think this is cool. I think I want to do it. We should do it.
Yeah, that's what it was, yeah. And it means even more to me that you trusted us, you know, to dive in, even though that was brand new to you. One presentation, and I could tell you saw something in it, you know, that we actually wanted people to see, which was the opportunity side of, hey, if I do this and it works, there's a huge world of opportunity available to fund. So yeah, that was back in 2016. You got started with a policy, and then you went through a period of time where there was a whole bunch of growth, but then a whole bunch of like mess I felt like was being created. And I'm interested to, you know, from 2016 you had your real estate portfolio, and you had one kind of lower key restaurant. It wasn't a big gigantic revenue producer at the time. I mean, it was making money, it was profitable. It wasn't anything like what the steps you were about to take, but here you are, not owning nearly as many. So it's like, what happened during that time frame, and how was IBC being used during that time frame? Yeah,
for sure. So after that, basically just kind of kept doing some real estate stuff, doing some restaurant stuff. We would pull money out of the IBC account, and we would use it for down payments on additional real estate assets. And that was nice because not only then could I, you know, write off the interest that I was paying on my mortgages, but I could actually write off the interest on my IBC funds. And while obviously they're still kind of growing in the background, which is incredible. Yep. Incredible benefit of IBC. But my kind of journey is that we opened a second restaurant. We're still kind of getting some real estate assets. And then actually we had a lawsuit a class action lawsuit against us for something that a manager had done at one of our restaurants. And if you talk to any kind of long-term entrepreneur, this is just kind of the risk you run in entrepreneur world. You know, things like this kind of come up and happen.
Yeah, like you had a staff member who someone got mad at, and now is going to try to work with the attorneys to gouge the business, which is you,
exactly,
for everything you've got. Which
cool. And sometimes you learn lessons the hard way because you think, hey, we're doing everything the right way, but then there can be somebody, you know, that you don't even know about or what they're doing. So unfortunately, like we went through this period where you know, we were concerned, are we going to have to liquidate all of our assets? Bankruptcy was even on the table for a little bit, or, you know, what should we do? And honestly, our faith in God and just taking faithful steps forward helped us kind of get through that time. And so we ended up needing to liquidate some of our real estate. We ended up kind of contracting, you know, some of our operations just to make sure we could kind of make everything through. But I actually do believe God used that time when COVID happened, because that was another time that we found ourselves in uncertainty, and all of our restaurants were shut down, and we didn't know if tenants would be able to pay their rent for our real estate assets. I mean, but being through time, you know, the peaks and the valleys, you kind of realize God is always faithful. And I do feel like kind of having IBC as something that you know is kind of stable and steady is also kind of one of those things that you can just kind of rely on, like, you know, knowing that no matter what happens to the economy, no matter what happens with these things, like it's just kind of always working there for you. And so it's nice knowing that some of that money, some of that time in the policies had seasoned, you know, every year that you get into it. And that was also kind of nice. And so it was something that we kind of just kept kind of being, you know, sticking with the plan of going with it. We weren't 100% sure if we were using everything effectively in IBC or if we were fully maximizing or not. And that's where honestly these annual check-ins that we would have would be super helpful. And then over time, we've kind of increased our commitment to it, and, you know, happy to give more details on that. But
I may try to pry a little bit in that too, but that was one of the things that I think you may have fallen prey to, which is very common, which is You get in and you start doing it, but it kind of sits on the back burner as all these like big things are happening in life, like opening new restaurants and then having lawsuits and then having a lot of success and then having it all get wiped away, and all of these things are occurring, and it actually can be really easy to put IBC kind of on the back burner. And so sometimes that's what happened. I would come to like a meeting with Chris or something like that, and it would be like, hey, Chris probably hasn't thought of this much in the last 6 to 12 months. And so I would say during that time, whenever your focus was so concentrated on these other things of life, infinite banking was off to the side, and it could have been possibly even bigger and better during that time frame, but it wasn't the right timing for you just because of all of the chaos. It wasn't going to be a good time, to like try to expand or build the bank even bigger or all these different things. That was from my vantage point of view, like, hey, he's just trying to keep his head afloat with all of this chaos. And so
I'd say that's accurate.
Well, and yeah, okay. But, with that being said, it was one of those things where some people kind of feel like, oh, I don't know if I'm doing it right. It's like, honestly, you can barely do it wrong. It's not like you were doing it wrong. It's just, could you have done maybe better? Could it have been a bigger piece of the expansion of the restaurants? Could it have been a bigger piece of some of the things? It could have been, likely, but it's not like that you were doing it wrong during that time frame. I mean, you were still using it to fund, whether it was the lawsuit payments or whether it was real estate down payments or, anywhere in between, it was being used. But one thing I do like to ask is, like, what were some of your big hang-ups or questions or perspectives that you think have changed just about the concept as you've lived in it?
Yeah. The number one thing that sticks out is I remember initially looking at the tables, and saying, okay, I started a policy, and let's just say I put $10,000 in a policy, and seeing, that the cash value year one or whatever is like $5,200. And you're like, where did my money go? I think that was the biggest thing, is that you kind of put money into it and it felt like you almost take a step back.
Yeah.
And I was like, that doesn't feel great. I mean, I know I'm buying some death benefit, and I know that it's kind of growing over time, but like, what if I need that money, or like, am I kind of losing money? And then you kind of start looking at that compared to like, well, if I put it in a stock, or if I put it invested here, like, year one, my balance is 10,500, whereas here my balance is 5,200, and so that was one of the biggest hurdles for me. And on top of that, it's like, oh, and now I'm having to fund it every year, and I'm still not even back, by year 3 or 4, I'm still like not even back to like even, like, and then you compare it to even more stuff. And so that was probably the biggest hurdle for me from a financial just perspective. You start thinking about the scenarios of how you can use it, and you're like, well, it is pretty amazing. There's no other asset where I can pull the money out and it still grows as if it's still there. So that's pretty amazing. But then if I like don't use it, is it really better than just investing in these other things? And you kind of just keep going back and forth in your mind a little bit. And I'd say that was probably the biggest like hang up in thinking about the policies, of why I'm like, yeah, I think I'll do a little bit, but it's probably good to diversify in these other things, and I don't want to make it a huge piece.
Yeah, I think it's super common. How would you say your perspective changed from that view of saying, hey, because really the way I look at it in most people's lives is you have two options to fund anything in life. You can either put the money into policies first and then use the policies to fund it, or you can never have put the money in policies and just fund it from cash. And those are like really, those are the options we have. We can either have the money go into policies first and go out, or we can have it just go never having touched a policy. And most people start to commit to IBC at a higher level when they realize that their like long-term wealth trajectory is going to be improved the more capital hits policies first before it's deployed. And so once that trigger like event occurs where they say, okay, yeah, if I put that money into policies first, yeah, I'll have less money than I did the day before to get this policy launched, and it's going to take some time to get it back, but I want as much money as I possibly can that's being used to capitalize my own banking system to move it out. All I'm trying to bring up is that, typically speaking, when that light bulb comes on, that's when people start to say, okay, now I don't actually want to go diversify in these other things before the money has hit the policies. I'm curious, do you think that you went down that track, or am I kind of off base on what maybe your perspective shift was?
Yeah, I think to a certain degree. I think the idea of putting it in the policy and then taking the money out to use it feels daunting initially, because you're like, well, it's such a process, and then I have to make an interest payment, and when's the interest payment due, and do I have to pay the whole thing, or how does that work? And I think once I started actually going through the process of like taking the money out and realizing like, oh, I can actually get this money out like pretty easily. Like it feels like it's not this huge black box.
Yeah.
Like I think that's the thing. Like when you have a savings account, it's like I can log in, I can move money with a click of a button, right? When you put in a life insurance policy, I think it feels initially like a step removed, as if it's like gone. Like I can't just log in and just move the money, right?
You're right.
So when you think about like a savings account, you're like, well, it kind of is, but at the same time, it kind of isn't. And so I think that was probably the initial like getting more comfortable with how the money can move, I think was a big thing for me.
By the way, I call that process, Chris, I hope I don't make you lose your thought, but I've been calling that process weaning yourself off of bank account reliance. That's like the phrase I've been using lately, is that to really get infinite banking operating to its fullest potential, you do have to slowly wean yourself off of a love for big bank account balances.
Yeah.
Because we're so used to feeling good when there's money in the bank. And we don't like when the things that take money out of the bank. And so there is a step, and you say, and I think you used a good word for it, that it's kind of daunting to whenever you're brand new into this and you've never used a policy before and you never had this thing, to be like, okay, my life, I have to get used to living life with this tool. Like I've got to get used to this being a big piece, and it can take some time, some marinating like with it. Transactions have to be pulled from it. You've got to pull money out, you got to repay it, you got to continue to grow in it. Otherwise, it will always be daunting, and you'll never get to what I'm describing as essentially weaning yourself off of the desire to have a large amount of money in banks as your support, and instead to feel totally confident and comfortable with the policies being that liquid support piece for someone's life. I don't know if that was even where you were going with that, but that's kind of the idea that I find happening over and over again is, as you brought up, it's kind of, we know how to operate with savings accounts. It's not daunting to put money in or take money out. We can do that all day, every day. Super simple. Policies, there's different style. We don't make deposits. We make premiums. And we don't take withdrawals. We take loans. We don't just make deposits back in, we make loan repayments back in. And there's two different transactions. And it is daunting. Like there's no way, that's why I typically recommend people kind of get in a way that gets their feet wet so they can learn it and then organically grow over time as their confidence level grows, because the only way your confidence grows is if you actually use the system. You can't just sit there with a policy and say, yeah, I've got this thing figured out. Or you can, and you probably just don't have it figured out. So
Right.
Anyway, I'll give you back the floor, but just to kind of reiterate that, it can be a long process of like what I call weaning yourself off of bank account reliance. Even in my own life, it's like a constant thing. Like, hey, a reminder that I don't need to have a lot of money in bank accounts. I can live my life with a ton of money in policies. I'll let you take it from there, Chris.
No, I mean, there's really, I think the second and the major other biggest thing was really, you kind of touched on it, but the simplicity of like with a bank account, I have money come in, I have money come out, I can use it how I want. I think the second hurdle is really thinking about like, okay, I'm committing to putting money in a life insurance policy. The second hurdle is really like, well, do I really want to pay interest on the money I take out? Like, should I actually pull it out? Should I just kind of leave it in there? And I think the idea of making loans to yourself is also probably like another massive hurdle that's just fairly foreign. You don't think about what does that mean to make a loan to myself versus just use money for my savings account. And from a pure accounting perspective, it's like, well, why would I increase my interest expense in any way? That makes no sense. But once you kind of understand that typically almost any transaction in your life that you're doing, even young or old, usually has some sort of ROI attached to it. I mean, there are just pure outflows, right? But I think the separation between the money that you have that you make just from your ordinary job in life that happens and kind of your operating fund, if you want to call it that, and then money that you spend on investments and other things. If you can kind of reconcile those two things and realize like, okay, the money coming out typically goes towards investment stuff. You could use it for things that don't have a true ROI and pay yourself back over time. That would still be a net positive, as you've talked about before, I'm sure. But I think getting over that hurdle of being like, I'm going to charge myself interest for doing that, that's a whole foreign concept too that takes some time to get comfortable around.
You're right. Well, and if I could pick up that point too, it's kind of one of those things where, like you had mentioned, something that I've been digging into actually in recent podcast episodes, which is mainly if you classify what your money is properly, then the transactions in your life can make sense, especially when it's dealing with policies. Yeah. So as you brought up, it's like, hey, this money that's going to be invested, I am actually perfectly fine moving that into policies. And then I can pull from the policies to make the investments. And then the investments can refuel the policies. And then I can do it again. And they can refuel it and I can do it again. And the idea is that, well, that's actually just like what it was. That's the same thing as if I was using a bank account to do it anyway. But with different terminology. I've got a withdrawal and deposits. Now I've got a premium, which is funding the policy. And then I've got loans and loan repayments to make all the investments.
The conventional financial system makes the bank rich using your money and pays you next to nothing in return. At Living Wealth, we believe in challenging the status quo. After all, most of those conventional tools only seem to make someone else rich. Let us show you how to become your own bank. Visit livingwealth.com/bank on yourself. You'll receive instant access to what we call the beginner's course. This free, in-depth, easy-to-follow course teaches people how to create and profit from infinite banking. We not only discuss the philosophy and principles behind infinite banking, but also offer real-life examples to demonstrate how it works. Even participants experienced with infinite banking often tell us how they learned a ton too. It's worthwhile regardless of your experience level. Stop letting the banks and Wall Street dictate your financial future. Again, that's livingwealth.com/bank on yourself to gain access to the free course today. Now back to Nate and Holly.
We actually just did an episode recently on what in your life is actually capital, what in your life is just overhead expense, and what money coming into your life is just transfer money that's kind of moving to and from policies. And if you can itemize what those are, the system can make a lot of sense. If you actually convolute those, then you'll never actually know what money should be paying a premium and what money should be repaying a loan, and when should you use policy loans and when should you not. There can be so much confusion. So I've been on a kick lately of trying to help people be able to logically make their own conclusions on what money should be used for what task in your life. Because it's daunting, as you bring up, it's daunting. What are some of your goals that you have right now as an entrepreneur? You've got your policies, they're being used. What are some things you're using policies to do now? And what are some of your goals for the future?
Yeah, that's a good question because I now that I've gotten more into it, I've really started putting more thought into how I want to use this. And I think the nice thing is it can really evolve over time. So right now I'm using the policies to invest in, we have a real estate fund that we'll invest in, and so that will pay a return. We have a lending company where we lend on, short-term construction projects, and that pays a return. And so we have these needs for capital that actually have businesses provide returns. And so it's kind of a natural marriage that I can take money out, move money in, and it works. It works really well. And I think I foresee that happening while I'm in, I don't know if you want to call these my prime years of, running businesses, but, I'm 35 right now. I will probably never retire. But
Amen.
actively working, and building these businesses for at least 20 plus years. I have 3 girls right now, and they're pretty young. They're 1, 2, and 3 years old.
Wow.
So, and we, Lord willing, will have another child. And so I really get excited about the idea of once they turn young 20s and they want to start investing in things, whether it's their home, investment real estate, if they have investment opportunities to start a business, whatever it might be, I would love for the policies at that point to be, instead of me investing in, these businesses that I've been doing and building over time, I would love to invest in their businesses and in their business dealings and really launch their business career. And that's the type of like legacy financing that I get really excited about. Now that I'm kind of in the lending world with this lending company that we have, you hear talk about like banks always make the money. You look at, even with the most recent run on banks, and you're talking about margin compression, regional banks struggling. I mean, JP Morgan is just,
they're happy about this, man.
They're very excited, right? Yes. Because banks always make money, right? And these banks that failed weren't even really not making money. They just didn't have, enough liquidity on hand. So I think the thing is, when you're on the side of banking and you start realizing how much money banks actually are making simply off of making money move. That's all they do. They just move money. And you see how much money that's making. It's like, if I can do that with my own businesses, and then not only that, but once my kids get to an age where they're starting to do that and I can move money through them, that is just a marriage of like a blessing on blessing to be able to do that for them, with them, as a family, and just kind of build that together.
Yeah. Chris, you're following in Ray's footsteps per se in that, because he is the one who pioneered that type of thing.
Wow.
In this world, truly. I mean, like, as far as creating a lending company that finances all of the family's dealings and different things, it's like that's what wealthy people do. They have these trust scenarios that are funding and your kids and your grandkids' lives, but not in like a trust fund baby format. It's more like a family bank. I mean, that's literally what they're using it's funding the family's dealings, but the goal is for the family to continue to produce value. And that's kind of what you're saying with your girls. Like you want to have them adopt your entrepreneurial spirit, and then you want to be their venture capitalist. That's what you want to be, and have all the money flow back into the family bank, not to somebody else's bank, and then be able to reuse it. That's what I think is amazing to work with guys like you, Chris. Truly, it's just because you can catch the vision of what the potential for something can be. And you're not afraid to dive in and do it because of what the potential has, the opportunity for the potential that it can provide. And some people, it's a little bit more difficult, Chris, than for you to see it.
Yeah.
The actual potential of what they can build with the banking system.
Well, what's fascinating is, so now that we have a lending company, a big part of my job is underwriting, right? Like borrowers come to us, they want to borrow money, and like any bank, good bank does, you underwrite them. You run credit, you look at their assets, you look at their history of how successful they've been, their income, all those things. And I don't really know them. They're kind of strangers. Some of them are friends of friends, acquaintances. But anyways, you make a decision to lend on them, right? And you kind of are like, I hope the capital comes back. And thankfully, usually it does. I don't really think people think this way until you start getting into IBC or start really thinking about future. But it's like, one thing I do know is I know how expensive kids are. So right now it feels like there's a lot of money going out just raising my kids, right? And there's all this data about, average kid to raise is $200,000 a kid or something. I don't know the number, but something like that.
Seems low
right?
to me,
Right, yeah. But no one talks about the opposite end, which is once your kids actually become contributing members of society, adults, their needs of banking in the future, you just think of like a starter home 20, 25 years from now is probably going to be, and I'm located in Minneapolis, Minnesota. So in our metro area, a starter home right now is around $300,000. So just natural appreciation time, it's probably going to be $400,000 to $500,000, for a home. And so let's say my 4 girls want to buy a home for $500,000 each. That's $2 million in lending just with a home. I mean, we're not talking about cars. We're not talking about businesses they might start. And so it's like, if you kind of project out and you start saying, okay, how can I build a bank that can support $2 million worth of lending, right? Like, what do I need to do now to kind of start that? That's the type of thinking that then you start, it just is this expansion of your mind,
right?
Of like, okay. And then when you start thinking about, okay, if I can keep $2 million worth of lending, let's say we only did that in the family and they pay me instead of the bank. And, what kind of death benefit does that buy? What kind of, return does that get you? How much does that grow in the policy? All of those things, you start realizing like, man, this is this is one of the most powerful things that you can do, not only from a financial perspective, but from like setting your family up for success and the legacy that you can kind of build. And I'm not talking just like one generation, hopefully like multiple generations down can be impacted positively by these decisions that are being made, today.
Yeah, absolutely. And I've actually ran the numbers for my own self with it, because I have 3 kids and 1 in the oven already. So I was looking at like, hey, in the next 20 to 25 years, I really hope I've got $2 million of cash value free and unencumbered, because I want to be able to finance mortgages if I can within the family. I can actually kind of run the numbers. That's going to produce probably close to, let me just see. If you were to invest $2 million in your kids' mortgages, that's $13,000 a month that's going to come back to you. That would have been going to somebody likely, but it's going to come back to the Bjorling family bank. And so that $13,000 is going to build up no matter what. But if it's building up in the policy and you finance like 30-year notes, 360-month notes within the family, that $13,000 a month over the next 30 years is going to end up being about $10 million in cash value. So you're like, okay, my $2 million mortgage is technically worth $10 million to the family when you run it through the policy system. And you're like, that's a lot of money. As you mentioned, the banks are making a lot of money. Like, hey, that's a lot of money to be made from the family banking system. Now, of course, it means you're gonna have to accumulate that type of capital to be able to handle that. On top of that, it also means that by the time that they actually need the money, you haven't pulled all your money out to go do all the things you want to do too. Right. So there's just so much opportunity out there that just looking for. But the fundamental point of that, Chris, is that while there's all this opportunity that exists in the world, there's actually a lot of opportunity that exists just within family units, which is what Ray was constantly trying to describe to people, that there's actually a lot of financing and banking capacity just within a family unit, that if you really see how to work the system together, it can be a win-win scenario for both the parents and the kids.
And just to put the cap on that, when I was talking about like underwriting, the credit worthiness of borrowers, that of these strangers that I don't know, like underwriting my kids is I'm going to trust them way more. Yeah. Or maybe I won't, right? But I'll know more about them as a borrower than I would know about anyone externally. So in terms of like underwriting a loan or making a loan, I feel 1,000 times more comfortable writing the terms that, would work for them compared to, Adam off the street.
Yeah, you're right.
So it's
I'm going through the financial proctology exam right now. And it's extremely uncomfortable. Like I wanted to open up a line of credit against one of my commercial property, like investment properties, and it's like torturous. I don't even think they're going to approve me. I'm like, I have a lot of money. I have a lot of income. I can pay you back. But it's actually just desperately needing all, tax forms, W-2s, 1099s. They don't love 1099s. They don't love business owners. They don't love all of this. And you're just sitting here thinking, all that to say, you'll, as you brought up, that's why private lending is such an important piece of an entrepreneur's life, which actually brings us to where I wanted to go with this, with your own business. I wanted you to give an opportunity to describe your cashability and your lending business and what you guys are doing, of course. But the idea is this. I'm seeing in my own life, and many other entrepreneurs are like me, where we are willing to pay a premium price to get capital without as much, financial proctology exam. So I don't know. Yes. I'm sure you guys do a good job underwriting, but I'm merely saying like, hey, a private lender will have its underwriting process, and they're not about to go sell the note to Uncle Sam. So they don't have to check every single box, even if it doesn't make sense to check the box. Like even if you're having a hard time with 1099 income, and like, well, that's not a W-2 paycheck, but it's not a pay stub. I prefer to see pay stubs. It's like you don't have to deal with this nonsense. So you'll find entrepreneurs are willing to go to private lenders and even pay them more interest than they would have, because they don't want to deal with all of the hoops you have to jump through to get actual bank money. And you guys are kind of filling that gap with Cashability, your lending company, and you're even willing to do things that banks typically won't even be willing to do. So you're like solving a marketplace problem, and they're happy to pay you more interest than technically like a bank loan would be, but it's like a perfect solution for it's a win-win scenario, which, as I mentioned before in the podcast, every business decision needs to be win-win, or else it's a really crappy business deal. Absolutely. Both sides have to win. And so I wanted to transition to that now you've got your policies, you've opened up a lot of businesses with them, you used them a lot to fund business, you've bought investments. Now a lot of it seems to be flowing through both your real estate investment fund, the Rise Fund, and your hard money lending business as well, which is Cashability. Describe how that's working.
Yeah, so kind of in growing in the real estate business, we started a real estate firm called Rise Realty. So we're a brokerage. We've got 30 agents in the Twin Cities area. And then we attach to that have something called Rise Fund, where we syndicate, commercial projects, pay a return. But while we have been working in this real estate space, going right off what you talked about, private lending versus going to a traditional lender that's wanting to sell the note, Fannie Freddie underwriting guidelines, all that stuff. So we created a private lending company called Cashability, and it was really born out of that exact thing of seeing people that were very creditworthy, had cash, and just they couldn't prove to a bank exactly in the box that they wanted,
right,
why they should lend on it. And the big gap really is any residential project that you start talking about, you want funds to renovate or improve. Any traditional lender, you start talking to them about it, they instantly just kind of clam up and have no idea what to do with it. They're just kind of like, wait, will this help you buy the house? We don't want to give you money to fix it or,
right,
construction. No, we don't want to deal with that.
We don't have a box for that.
Exactly. And they instantly push you into the commercial, you got to go to a commercial lender for that. Well, now you start talking to a commercial lender, you don't get a 30-year amortization, you get a 20-year amortization. And it's not a 1% origination fee, it's this origination fee. And it's a whole other thing. And then you still got to do the proctology exam. You got to prove why they should give you the money. So anyways, so we saw this gap and we thought, man, there's a lot of people out there that are doing renovation projects or they need gap financing for a project or bridge loans. And we can do it. We can do it easier and we can do it better and we can do it faster. And our underwriting can actually be tailored towards people that are creative, entrepreneurial or whatever. So our model is really simple. We take investor money. So we do have investors that join, and it's honestly, the investment is perfect for people doing IBC because we pay a monthly return. And so if people are putting money into policies and they're getting charged interest, it's truly just an arbitrage play at that point. Mm-hmm. So we pay 10% on people's money that invest with us, and we pay you a monthly on that. And so you get an ACH every month in your bank account, and you can put in your policy if you want. And then we go out and we charge people around 10%, but we charge an origination fee. This is short-term lending. So the projects are typically, they're only lending from us for, anywhere from 3 to 12 months. And so, but all of these projects that people are coming with, like you mentioned, have great margin to them. And they are just tired of being a part of this lending process that is just doesn't fit what they're doing. And so we fill that need. And so for them, it's a win because they have, huge margins on these projects. We can take investor money and we can comfortably pay the return on that. All of our deals are secured by real estate assets. So, and
so you're in first position on every asset, which was a big deal to me too. Yeah, for sure.
We only do first position deals. So we're always first position on the asset. We always have a personal guarantee on the borrower. So, if something goes wrong and, then they need to cover the difference. And so, we write very secured loans. And this is what's gotten me into the banking side of things and really seeing kind of the value of it. It's kind of win-win-win. Our clients win, we win, the investors that invest in us win. And so I'd encourage anyone that has money sitting on the sidelines, obviously put it in a policy. If you have money in a policy or if you have money kind of on the side and you're looking to invest it somewhere, I think Cashability is a phenomenal place to invest it. We'd love to chat and talk about how we can start paying you 10% on your money. There's just tons of opportunity out there, and the money flow, really all we're trying to do, and what my goal is, what Nate's goal is here too, is we're just trying to move money in a way that's beneficial. Yeah. The most beneficial way that you can do it.
Yeah. So. You're creating a win-win-win scenario, which is that's what business is all about. We have a lot of clients who have an interest in getting into the lending world, but they don't have the relationships and the framework to build Cashability themselves. Like that's the problem. So like you guys have Rise Fund and real estate. You have an agency filled with agents who are dealing with investors and trying to trying to buy sell homes. And you guys said, what would be great as a synergistic business move is if we added a banking branch to like we got the Rise Fund where we're investing. We've got real estate agents who are actually selling and finding properties, which is already a synergistic play. And then you added the financing piece, which is like the third synergistic play in the conglomerate. And then you're solving a piece for all the people who are trying to find investments. You're like, hey, we can help you find the deals. And then you guys, what I loved about it too is that you guys are saying, hey, we only really work with, at least at the time when you pitched it to me, in the Twin Cities. And, in the metro that you're actually you're right. Investing a lot of money in it. Your whole group is selling properties for clients all the time, finding property, selling it. We have clients on our end, of course, who want to get into lending, but they don't have that pipeline of potential deal flow to finance. So they look at Ray. They hear Ray on my show, or they hear Chris, and they're like, yeah, that sounds so cool, but I don't really know who to lend money to. And so it is true that this is you can solve that for them, where you can lend money through our lending corporation. And essentially what they're trusting is your underwriting process, which there's reasons to do that. There's reasons that they can trust that. I love it.
Yeah. Thanks.
And anyone who, runs with Chris is like, hey, this guy's a fellow IBCer. So he's got a whole jug of Kool-Aid with him too.
Yes.
And is funding quite a few policies at this point as well. But how would someone reach out to you? How do they even get a hold of you, Chris, to like, hey, we're interested in learning more about either the Rise Fund or Cashability or something like that?
Yeah. So, both companies have websites. So Rise GRP for Rise Group. RiseGRP.com is our realty side.
And that's with a Z, by the way, right? R-I-Z-E?
Yes, R-I-Z-E.
Yeah,
thank
Rise
you. GRP.
Group. Yeah, okay.
Rise Group. And then Cashability, just kind of how you'd think of it, the word cash and ability put together, .com. I'm Chris, C-H-R-I-S, at Cashability.com. So you can throw me an email, check out our website, and happy to connect.
Absolutely. Well, anything else you want to say, Chris, before we close it down?
I think the main thing is I've really benefited from our relationship, Nate. I appreciate you. I appreciate what you're trying to do. Honestly, feels like kind of spreading the gospel of financial freedom.
I feel it, man.
You're very passionate about what you do. I feel the passion. I have kind of internalized that too, so I'm pretty passionate about this as well. When I talk about it, talk to other people about it, I try to kind of spread the gospel of it as well. And that's kind of how I feel about my business career too. Like, I'm very passionate about the stuff that I do, and so I love seeing it. I love seeing people are passionate about their business. I think what you guys have built is awesome. I think Living Wealth is incredible. There's other companies out there that are starting to do IBC as well, but I don't know anyone that does it better than Living Wealth and you guys. So if anyone's thinking about it, I just can't wholeheartedly recommend you guys enough to jump in with Nate. You can trust them. I think trust is a big thing in business. I've been doing this since 2016, so we've got some time together. You guys have always been available to help answer any questions I've had anytime. I just appreciate you guys, and yeah.
Well, thanks for that, Chris. That's amazing. Yeah, we appreciate you too. It's been such a joy to watch you, and I always like to tell people I grow just from spending time with my own clients, and I learn so much, and I've learned a lot from Chris. Just to see another guy, because we were both young when we met. Like, we were both in our 20s, trying to get things rocking and rolling and improving in our lives. And I was able to look at Chris and be like, he's got some amazing things moving. And that just helped me be like, okay, I can do something similar. And it just, we can feed each other's entrepreneurial drive. I've never got to taste the coffee yet, Chris, but I will. I need to come up to Minneapolis and drink a cup of coffee with you from your own coffee shop and taste and see your wife's amazing pastries that
you're welcome anytime.
Started an empire. That's awesome. Well, thank you so much, Chris. Yes. Yeah. Well, by the way, what is your coffee shops?
It's called Gray Fox Coffee.
Gray Fox Coffee.
G-R-A-Y. Gray Fox.
Yeah. But thank you so much, Chris. I guess we can close it down for now. Once again, you can go to cashability.com or RIZEGRP, risegroup.com, to go check out Chris and his multiple companies. There's opportunities for us IBCers to actually put our money to work with them. And just like he says he can trust me, I certainly trust him greatly, having a 7-year relationship with him. You can definitely trust Chris that he has his client's best interests in mind. This has been Dollars and Nonsense. If you follow the herd, you will be slaughtered.
One last thing before we go. Start your journey towards financial security and wealth today. Visit livingwealth.com/bank on yourself. Upon completing the course, you'll have all the information you'll need to see if infinite banking is right for you. Again, go to livingwealth.com/bank on yourself.